I think the gold stocks will hit new record highs before gold hits 5,200. So by the time gold is back at 5,500, which I will expect will happen sometime before the middle of the year, we're going to be much higher than we were the last time. The world is returning to a gold standard, whether the United States realizes it or not. It's not going to a situation immediately where sovereign currencies are redeemable in gold, but they're going to be backed by gold as a primary reserve asset. Central banks, foreign central banks, are going to hold gold and not dollars. And that means gold is going a lot higher and the dollar is going a lot lower. U.S. long-term interest rates are going a lot higher. U.S. consumer prices are going a lot higher. And the American standard of living is going a lot lower.
Broadly speaking, gold prices move in cycles and are highly correlated with macroeconomic factors. In particular, uncertainties around the Federal Reserve's monetary policy outlook, as well as lingering inflation levels, have driven newfound interest in gold. Renowned financial expert Peter Schiff expects that by the time gold moves toward $5,500, potentially before mid-year mining stocks will be trading significantly higher than they were during gold's previous run at similar levels. According to him, the real future of digital finance isn't Bitcoin, but the digitization of gold. Tokenized gold merges 5,000 years of physical stability with the instant efficiency of the blockchain. Because every gold-backed token is legally tethered to a physical gram in a vault, Peter Schiff views it as the only digital asset that functions as a true store of value. As of February 2026, gold is significantly outperforming Bitcoin on a year-to-date and one-year basis, extending a historic divergence that began in 2025. While Bitcoin historically delivered higher long-term cumulative returns, gold has recently dominated as the preferred safe haven asset amidst global macroeconomic uncertainty. Gold has remained money through every technological era, from the Industrial Revolution to today's digital age. In his view, modern technology doesn't replace gold, it enhances its usability. Schiff ultimately predicts a broader global shift back toward gold as a core reserve asset, with central banks gradually reducing reliance on the U.S. dollar. Looking ahead, Schiff warns that the United States faces a potential sovereign debt and currency crisis, which could drive gold prices significantly higher. If you're ready for unfiltered truth and sharp market analysis, hit that subscribe button. Let's explore the latest insights from Peter Schiff's recent interview.
Meanwhile, one thing that is happening almost every day now, I hear from another company, many of them that are pretty big in the crypto space now, all reaching out to me about gold tokens. Everybody wants to tokenize gold. Everybody wants to come out with a gold token. This is going to be huge. Now, of course, no one's going to get rich quick tokenizing gold because you actually have to have the gold, right? People got rich tokenizing nothing because it cost them nothing, and they can sell it for a bunch of money to a bunch of fools who didn't realize they were buying nothing. But if you tokenize gold, you're going to make a token. If the token is an ounce of gold, you got to spend $5,000 to get the ounce of gold, and then you sell it for just a little bit over $5,000. So it's a low margin business, but it's a great product, and it's going to replace Bitcoin because Bitcoin is not a store of value. It's proven that. It's not digital gold. That's been proven. So what the hell is it? If the purpose of Bitcoin is so you can have a medium of exchange, so you can buy and sell stuff with it, so you can send it and receive it, so you can send remittances, why settle for Bitcoin that could collapse? Why not have tokenized gold? I mean, I'd rather use tokenized dollars. If I needed to make a payment and I wanted to do it through crypto, or somebody was going to pay me, I'd rather get paid in Tether. I'd rather get dollars, right, than Bitcoin. Now, I'm not dumb enough to save the dollars, but I can accept them and I can spend them. See, dollars, most people have recognized for some time that the dollar is not a store of value. So they don't save their dollars. They get rid of them. They invest them. They buy assets with their dollars. But the dollar still works very well as a medium of exchange. If you want to buy something, pay in dollars. Very easy. There's all sorts of ways to pay in dollars. It's very convenient. People have used gold as a store of value, but they haven't used it as money because it's not convenient. But what's happening now with the new technology that we have with the internet is that it's making gold more convenient. I was in this X space today, and some guy was arguing with me, in favor of Bitcoin. And I was, they said, why would we have gold? He said, why would we go back to the horse and buggy, or, when we have better technology, like we have, and the point I made is we're not going backwards to gold. We're going forwards when we tokenize gold, when we use modern technology and apply it to gold. But gold is still money. That hasn't changed. We went through an industrial revolution. If you look at, the transformation of the American economy in the Industrial Revolution. So before the Industrial Revolution, people rode on horses. They read by candlelight. They didn't have air conditioning, or, they heated their homes with fire. They had no air conditioning. You had no telephone. You had no radio. You had no television. You had no electric appliances. You didn't have any indoor plumbing, right? If you wanted to go to the bathroom, you had an outhouse. If you needed water, you had to go fetch it, from a stream. You had to have a well, and you had to pump it, right? I mean, people lived very differently prior to the Industrial Revolution. After the Industrial Revolution, right, in the early 20th century, late 19th century, completely different lifestyle, modern lifestyle, like today, just without the computers and the cell phones. But all of a sudden, people are driving cars, not horses. They got electricity. They got indoor plumbing. They got air conditioning. We have appliances. We have dishwashers and vacuum cleaners and washer dryers and refrigerators. We have all this stuff, all of these machines that we didn't have. Yet we stayed on the gold standard. It wasn't like they said, now that we have a modern economy with electricity and all these modern machines, well, we don't need gold anymore. No, gold worked great before the Industrial Revolution as money, and it worked great after the Industrial Revolution. In fact, it made the Industrial Revolution possible. We were on a gold standard. So even if we go into the digital age, we advance from an industrial age to a digital age, that doesn't mean that we abandon gold. That doesn't mean gold can't work because we have a digital economy. Look, in a digital economy, we still eat food. We don't eat digital food. We need real food. I live in a real house. I can't live inside a digital house. I need an actual house to keep me warm, to keep me dry, right? So some things don't change as other things improve. And so we can stay on gold. In fact, that is what the world is doing. The world is returning to a gold standard, whether the United States realizes it or not. It's not going to a situation immediately where sovereign currencies are redeemable in gold, but they're going to be backed by gold as a primary reserve asset. Central banks, foreign central banks, are going to hold gold and not dollars. And that means gold is going a lot higher and the dollar is going a lot lower. U.S. long-term interest rates are going a lot higher. U.S. consumer prices are going a lot higher. And the American standard of living is going a lot lower. Now, all this may change in the future, based on the productivity that could be unleashed through AI, but that's something that's going to be enjoyed worldwide. It's not going to be something that is going to be exclusive to the United States. But in the meantime, we are going to have to get through a real crisis in this country, not just a financial crisis, but a sovereign debt and a currency crisis.
In his analysis, Peter Schiff disputes President Trump's characterization of the U.S. economy as the world's strongest, arguing that record stock market highs do not equate to genuine economic health. Measured against gold, Schiff stresses, the Dow is actually losing ground, signaling erosion in real purchasing power. He further observes that while U.S. indices show only modest gains this year, international markets are materially outperforming. Schiff attributes this divergence to a capital shift away from what he views as overvalued U.S. equities toward more attractively priced foreign dividend-paying stocks. Even though we're only a little over a month into 2026, the momentum behind gold's rally doesn't appear to be fading. With the commodity currently hovering just below $5,000 per ounce, smart investors are surely wondering how much higher the precious metal can soar. Moving forward, Schiff predicts further dollar weakness, pointing out that strong jobs data no longer supports the dollar or pressures gold. He sees this as a sign of de-dollarization, with capital moving away from U.S. assets, potentially weakening America's economic and global influence.
So, while Donald Trump continues to refer to the American economy as the hottest in the world, when it comes to stock market performance, it's about the coldest. So what's happening in the markets, and Trump brags about it, right? The Dow Jones hit 50,000. Trump got very excited about that. And he's now predicting that before his term is over, the Dow is going to be 100,000. Now, he's claiming that this stock market performance is because of his great policies, because of his great tariffs, and because we have a great economy, we're getting record high stock prices. But of course, Trump overlooks the fact that we had one record high after another when Biden was president. And Donald Trump claims that when Biden was president, we had the worst economy in the world and the worst economy in the history of America. Yet despite that, we had record highs in the stock market. So if the stock market can make record highs when we have the worst economy in history, how come now it means that we have a great economy? Why can't we have a continuation of the same bad economy we had under Biden, now under Trump? And since the stock market moved up despite a weak economy under Biden, it's continuing to move up despite the continuation of a weak economy under Trump. That is what's happening. But what's also happening under Trump is that in real terms, priced in gold, the stock market keeps going down. The Dow is worth less than 10 ounces of gold. I mean, the Dow is going down in terms of real money, just the way it went down in terms of real money under Biden, because we don't have a hot economy. And in fact, if you look at the U.S. stock market year to date, the S&P is up a little over 1%. I mean, sure, yes. I mean, if we go up 1% a month, right, that's actually more than a month, maybe a month and a half. Maybe we'll have a 15% gain, which is still a good return. I'm not saying that up 1.5% a month, isn't a decent return. It is. But compared to what's happening outside the United States, it's nothing. Foreign markets are on fire. So if we have the strongest economy in the world, why do we have one of the most lackluster stock markets in the world? Why are all these other countries that, according to Trump, are doing way worse than we are? Why are their stock markets so much stronger? If strength in the stock market is reflective of underlying economic strength, if our economy is so much better than everybody else's, why is our stock market so much worse? Did not lift the dollar. Now, you could argue that the dollar paired its losses against some of the currencies after the release of the better than expected data, but it wasn't that big of a rally. And gold didn't sell off at all. Gold ended the day higher than it was before the jobs numbers were released. This was not what happened in 2024 when we got a stronger than expected jobs numbers. That was when gold went down. Now, of course, it had a strong year, but the down days, a lot of those down days were on the job Friday when the jobs numbers came out better than expected and gold went down. Well, gold did not go down today, despite the better than expected jobs numbers. Now, maybe that means that the gold traders aren't fooled by these numbers anymore, or it also just shows that this market is so strong that it doesn't even matter, that there's nothing that is going to derail this move. But the dollar didn't catch a bid from those numbers. And I think the dollar index looks very weak. We're trading right now at around 96.80. I think we can make a swift move down to about 90 even by the end of the quarter, by the end of March. Now, that would be huge if that happens. But looking at the chart, I think we could see something like that happen. And that is going to accelerate the excess returns that are being enjoyed on foreign stocks relative to U.S. stocks. By definition, it's going to push up those returns because I'm measuring them in dollars. But also the weakness in the dollar is going to provide another push to get people out of U.S. assets, to minimize their exposure to the falling dollar. And the question is why, right? If we have this really super strong economy, why isn't money coming in? In fact, Donald Trump keeps bragging about all the investments, the trillions and trillions of dollars of foreign investment that's supposedly coming into the country as a result of his tariffs and his negotiations. Well, where is that money? If it was really going to come in, if it was coming in, the dollar would be going up, because if you're a European business and you're going to invest in the U.S., you need dollars. You got to take your euros and buy dollars because the investments in the U.S. are in dollars, but the dollar's going down. So that suggests to me that these investments are not real. Yeah, it's very easy for a foreign leader or some foreign companies to basically tell Trump exactly what he wants to hear so he can repeat it and talk about the trillions and trillions of dollars that are coming in. But the reality is that's not the case. Money is coming out of the United States. It is not going into the United States. The world is in the process, as I've been saying, of de-dollarizing, walking back its relationship. The U.S. is going to be less important in global trade, not more important. The dollar is going to lose a considerable percent of its value. And as a result, we're going to lose a lot of our influence. We're going to lose a lot of our military strength, because if we can't finance the military, if we can't pay the troops, if we can't supply the troops, if we can't, supply them with munitions, if we can't afford the parts, if something breaks down and we can't fix it, our whole military has been a function of the dollar's role as the reserve currency. And that privilege is being revoked. That is what is happening. Nobody is talking about it, but the markets are letting you know.
Gold prices are forecasted to continue rising in 2026, with some projections suggesting a surge towards $6,000 per ounce, or even higher in the coming years, driven by intense central bank buying, geopolitical instability, and a weakening U.S. dollar. Gold is significantly outperforming Bitcoin in early 2026, with the Bitcoin-to-gold ratio hitting lows near 18.5, as investors rotate toward traditional safe havens amid macroeconomic stress. If the global reserves increasingly shift toward gold, could we be witnessing the early stages of a major monetary reset? Let us know what you think in the comments. If this video brought you any knowledge, give it a like, subscribe, and ring that bell so you're always in the loop. See you in the next video.